All right, we're going to knock 10 years off your loan, but this is real insider stuff, okay? The big banks don't want you to know this, so do not tell anyone. Okay, let's have a look at this example. Now, your income is $150,000 a year, 12 and a half a month. You pay some tax, you pay some living expenses, and you're left with $6,000 a month. You're a genius. Okay, now you walk into CBA and they tell you can borrow $750,000 for a 30-year owner-occupied loan. Why CBA? Well, because they're the biggest bank, and as I said, this is an example. Now, your rate's 6% and your monthly repayment is $4,500 a month. But hang on, you can afford $6,000 a month, yes, but when they assess your maximum capacity, they actually use a buffered assessment rate. So while your actual rate is 6%, they've assessed your repayments at 9%, okay, which is $6,000 a month. Now, every loan in Australia, consumer loan, is regulated by the National Consumer Credit Code, and every mortgage that is taken from a bank is assessed this same way, okay? That is legislation, and that's over 80% of every mortgage in Australia. So, from the minute you take your loan, you're obviously instantly in a monthly surplus of $1,500 a month. So what do? Well, you take your loan out. Let's have a look. Month one, you make a $4,500 a month repayment and $1,500 goes in your offset. Now, here's the strategy, okay? You put this cash in your offset and you do this for how long? 20 years. And what do you know? Oh my God, you've paid your loan off 10 years sooner. I've just helped you pay your loan off 10 years sooner. Have I? Of course I fucking haven't. But sign up to my course and pay me $10,000.